Welcome to the deep dive.
Great to be here.
So today we're doing something a little different, not cracking open the latest bestseller.
No, we're actually looking at a document you might normally just, skim past.
A shareholder letter, specifically the 1999 letter from WESCO Financial Corporation.
That's the one, with Charles T. Munger as chairman.
And our mission really is to pull out the key insights hidden in plain sight here.
Exactly. Insights about WESCO, sure, but maybe more importantly about Munger's whole investment philosophy.
Lessons that apply to anyone interested in investing, right? No matter their background.
Absolutely. Timeless stuff.
So we've got two main things guiding us, some specific questions we use to focus our analysis.
And the letter itself, obviously. The 1999 WESCO shareholder letter. It's very Munger.
Let's dive in then. Set the scene for us. 1999 Munger WESCO.
Okay, so Charles Munger, chairman of WESCO, already famous, obviously, for his role alongside Warren Buffett at Berkshire Hathaway.
And that Berkshire connection, even if indirect at WESCO, it definitely signaled a certain way of doing things.
For sure. A focus on value, long-term thinking. WESCO itself was a holding company.
Meaning it owned various different businesses.
Right. Primarily insurance, but other niche operations too.
And the environment in 99. What can we gather from the letter?
Well, you get the sense of navigating market cycles, dealing with specific financial challenges. Munger's very frank about all of it.
No surprise there. And his philosophy clearly shaped WESCO's path.
Profoundly. You see it in their strategy, their acquisitions. It wasn't about chasing trends. It was about building solid, lasting value.
Okay, let's get into the numbers for 1999. WESCO's performance. It's kind of a tale of two figures, isn't it?
It really is. You've got their normal net operating income, basically, the earnings from the core businesses, stripping out unusual items.
And that figure looked good.
Yeah, it showed a healthy increase in 99 compared to 98. $45.9 million versus $37.6 million.
So the underlying operations were strong.
Exactly. But then you look at the consolidated net income, which includes everything.
And that actually went down.
Right. From about $71.8 million in 98 to $54.1 million in 99.
So what caused the drop if the core businesses were doing better?
It was mainly down to much, much lower realized gains from selling securities in 99 compared to the year before.
So not an operational issue, but a difference in investment gains they actually cashed in.
Precisely. Munger's implicitly telling you, focus on the operating performance. That's the real engine.
Got it. And WESCO's structure back then, the main parts.
At year-end 99, it basically boiled down to three main subsidiaries.
Okay.
WESCO Financial Insurance Company, or WESAIC, the Kansas Bankers Surety Company, KBS, and Precision Steel.
And each of these kind of illustrates Munger's approach.
I think so, yeah.
Okay.
Let's take WESAIC first.
The insurance arm.
Right. Its own operating income was up in 99, but what's interesting is this long tail. It was still benefiting from float.
Float being the premiums collected before claims are paid out.
Exactly. And this float came from a reinsurance deal that actually ended way back in 1989.
Wow, 10 years earlier.
Yeah. They still held about $21 million in assets from it. That's Munger loving those long-duration, low-cost funds.
Makes sense. What else about WESVEC?
It was also involved in supercat reinsurance. Massive, rare disasters.
High risk, potentially high reward.
Potentially high loss. Munger is crystal clear. He warned shareholders something like horrible underwriting losses are sure to be followed sometime.
Classic Munger realism. Don't get complacent.
Exactly. It's about understanding the risks you're taking, even if they haven't materialized yet.
Anything else in WESVEC? Costs. Strategy.
Yeah, very low operating costs. Partly because other Berkshire companies would send business its way for just a tiny commission, like 3%.
The Berkshire advantage.
Right. And strategically, WESVEC actually provided a big chunk of the funding via an internal loan for WESCO's next big acquisition.
Which we'll get to. Okay, next up. Kansas Bankers Surety, KBS.
Right. WESCO bought KBS back in 96 for about $80 million cash.
And it was a solid contributor in 99.
Yeah, decent insurance income.
Yeah.
But KBS is a perfect example of Munger-loving niche businesses.
How so?
It started in 1909, just insuring deposits for Kansas banks. By 99, it served small and medium community banks, mostly in the Midwest.
Very focused.
Super focused, sticking to what, that circle of competence, and they made a change in '98. They started keeping much more of the premiums themselves instead of passing risks off to reinsurers.
Retaining more risk, but also more potential profit.
Exactly, and it paid off. Their combined ratio, a key insurance metric where lower is better, was fantastic. 59.4% in '99.
Wow, that is good. Below 100% is profitable underwriting, so 59% is excellent.
Exceptional, really. Shows discipline. Run by a guy named Donald Tell.
Okay, so discipline niche operations. Now, the big move you mentioned, court business services.
Yeah, the acquisition closed in early 2000, right after the period this letter covers, but Munger discusses it. $384 million cash, plus they took on about $45 million in debt.
And what did court do?
Leader in rent-to-rent furniture. So businesses or individuals renting furniture for temporary needs, not usually planning to buy it.
Like for relocating employees or temporary offices?
Exactly that kind of thing. A durable, necessary service.
Seems like a solid, maybe unglamorous business.
Very Munger. And he gets into the accounting weeds a bit. Explains that a big chunk, like 60% of the purchase price, was goodwill.
Which has to be amortized, reducing reported earnings on paper.
Right. He estimated about a $6 million hit to reported earnings each year from this amortization, mostly non-tax deductible. But then he says, look, this is just accounting. It doesn't mean the real value is deteriorating.
Seeing through the accounting to the economic reality. Another Munger hallmark.
Absolutely. Don't confuse GAAP earnings with economic earnings.
And the management at court.
Munger gives a massive vote of confidence to the CEO, Paul Arnold. Says WESCO headquarters won't interfere at all.
We would be crazy to second-guess a man with his record.
That's the quote. Huge belief in decentralization, trusting good managers. Classic Buffett and Munger.
Okay, moving on. Precision steel.
One of the older WESCO businesses.
Yeah.
Its contribution was down a bit in '99 from '98.
Why was that?
Not because they sold less steel. Pounds sold were actually up slightly. It was pricing pressure.
Competition.
Market realities.
Yeah. They also spent some money getting their computer systems ready for Y2K. Remember Y2K?
Vaguely. A reminder of the era.
And there was a leadership change there, too. The longtime president, David Hillstrom, retired after over 20 years.
Replaced from within.
Yeah, by Terry Piper, who'd been with the company for 40 years. Started at the bottom, worked his way up.
Shows stability, promoting from within.
Exactly, building continuity.
Okay, what else was in the WESCO mix? You mentioned Tag Ends from its past.
Right, from its days as a savings and loan, a small real estate subsidiary, nothing huge. But the main remnant was a big slug of Freddie Mac stock, 28.8 million shares.
Freddie Mac, the mortgage giant.
Right, they'd bought it for $72 million.
Okay.
But by the end of 1999, its market value was $1.4 billion.
Wow. That's quite a return. Understatement. A massive demonstration of patience, compounding, and, well, making a really good investment years ago and just holding on.
Incredible. Any other bits affecting the bottom line?
Just some minor stuff grouped as other normal net operating income or loss. Losses on their office building rent, some interest in dividends, offset by costs of selling off old foreclosed properties. Nothing major, but Munger accounts for everything.
Transparency again.
Always. He even points out why a small loss category widened slightly because some Citigroup preferred stock they held got converted to common stock, paying a lower dividend. Detail.
He also explained something about realized versus unrealized gains, didn't he? How they affect equity.
Yeah, good point. He clarified that while selling stocks creates realized gains, which boost reported earnings for that year.
Like the $7 million in '99 or the $33 million in '98.
But it doesn't really change shareholder equity much, because those gains were probably already sitting on the books as unrealized gains.
So it's just moving from one pocket of equity to another, from unrealized appreciation to retained earnings.
Pretty much. He's teaching shareholders not to get too hung up on the timing of realized gains when thinking about the overall value buildup.
Okay, so that's the breakdown of the businesses. How does this all tie back to Munger's core philosophy, especially how he thought about WESCO's value?
Well, he has this very direct way of estimating WESCO's intrinsic value per share in the letter itself.
Which is quite rare for a chairman to do so explicitly.
Very. He breaks it down. Two main parts. First, an estimated after-tax liquidating value, what you might get if you sold everything off.
And he put a number on that?
Yeah, about $266 per share for year-end '99.
Okay, part one. What's part two?
Part two is the value he assigns to that interest-free loan from the government.
The deferred taxes on the unrealized gains, like in that Freddie Mac stock?
Exactly. He figures that deferred tax liability is like the government lending the company money interest-free, which has some value.
But not the full face value of the deferred tax.
No, definitely not. He's very clear on that. He estimated the value of this loan at only about $20 per share, even though the total deferred tax was way higher, around $99 per share.
Why the big difference?
Because it's temporary. You actually have to pay the tax when you sell. So it's a benefit, but a limited temporary one. Don't overcount it.
So add the two parts. $266 plus $20.
Gets you his estimate. Intrinsic value around $286 per share at year-end 1999.
And how did that compare to the prior year or the market price?
Interestingly, his $286 estimate was actually down 16% from his estimate the year before, primarily because the market value of their investments, like Freddie Mac, had dipped a bit from their peak.
He reported a decrease in his own intrinsic value estimate.
Yep. And he also noted the stock price on December 31st, 1999 was $245 per share.
So trading about 14% below his estimated intrinsic value.
Right. The transparency here is just remarkable. Admitting value went down, acknowledging the stock price difference, no spin.
That interest-free loan concept really is a key Munger idea, isn't it? Understanding the nuances of deferred taxes.
Huge. It's about recognizing the economic benefit without getting carried away by the accounting number. It provides investable capital, but it's not permanent equity.
And he was consistently warning about market swings, right?
Sure.
Even quoting himself from the previous year.
He did. He reminded shareholders that unrealized gains are subject to market fluctuation, possibly dramatic on the downside. And indeed, WESCO's portfolio did take a hit in '99.
So gains on paper can vanish.
Easily. It's a lesson in humility and not counting chickens before they hatch.
Now, maybe the most striking part. His comparison of WESCO to Berkshire Hathaway.
Oh, yeah. Absolutely brutal honesty.
What did he say?
He basically said, look, the business and human quality in place at WESCO continues to be not nearly as good as that in place at Berkshire Hathaway.
Wow. Directly comparing his own company unfavorably to his partnership.
And he didn't stop there. He said each dollar of book value at WESCO provided much less intrinsic value than a dollar at Berkshire, and that the gap was widening.
Incredible candor. Why do that?
Intellectual honesty, managing shareholder expectations, maybe also subtly highlighting the exceptional nature of Berkshire.
It speaks volumes about his commitment to transparency, which you see everywhere in the letter.
Totally. He gives extra breakdowns of earnings, tells people to go read the detailed 10K filings, reread old reports. He wants informed shareholders.
He's educating them, not just reporting.
Exactly. Providing the tools for due diligence.
And amidst all this, they did bump the dividends slightly.
Yeah, just a small increase from 29.5 cents to 30.5 cents per share. A nod to returning some cash.
So let's pull it all together. We've gone deep into this 1999 letter. What are the big timeless takeaways for you, the listener, today?
Well, first and foremost, I think, is the power of patience, long-term investing. Munger's focus is always years, decades, not quarters.
You see it in holding Freddie Mac, the long tail of the insurance float.
Right, and accepting short-term bumps like the investment portfolio dip in '99 without panicking.
Second big lesson.
Understand the business, really understand it, before you invest. Munger's detailed descriptions of KBS's niche or Cordy's rent-to-rent model show that deep knowledge is essential.
It's not just numbers on a page, it's understanding how the money is actually made.
Precisely, which leads to the third point, rationality over emotion.
Keep a clear head, especially when markets get crazy.
Yeah. His methodical valuation, his warnings about hype, his blunt honesty, it's all about disciplined thinking, not getting swept up in fear or greed.
And he pushes you to keep learning, doesn't he?
Constantly. Telling shareholders to reread old reports, dig into the details. It's a mindset of continuous learning, critical thinking, questioning assumptions. Don't just accept the narrative.
That applies way beyond investing.
For sure. And his comments on the '99 market, frothy, he called it. Even while WESCO's own stocks lag, teach you about navigating hype.
Focus on underlying value, not just the market temperature.
Exactly. Be prepared to look wrong in the short term if you're focused on long-term value. Contrarian thinking when necessary.
And finally, the emphasis on management.
Huge. His trust in Paul Arnold at Court or Donald Towell at KBS, we'd be crazy to second-guess them. Finding and trusting great managers is fundamental.
It's not just assets, it's the people running them.
That's a cornerstone of the Munger and Buffett approach.
So it's amazing how much wisdom you can pull from a single decades-old shareholder letter.
It really is. The principles Munger laid out then are just as relevant, maybe even more so, today.
It really demonstrates the enduring value of his thinking.
Absolutely.
Which leaves us with a final thought for you, the listener. We dug into this one specific, maybe overlooked document.
Yeah, so the question is, what other hidden gems might be waiting for you in sources you usually ignore? Reports, letters, footnotes.
And maybe more broadly, how could adopting Munger's intense focus on intrinsic value, the real underlying worth over just market price or surface appearances, how could that change how you approach information, decisions, and creating value in your own work, your own life?
Something to think about, definitely. Beyond just the stock market.